The year 2023 looms as a time of great uncertainty, with many experts predicting an imminent financial crash. Robert Kiyosaki highlights that traditional investment strategies often rely on a buy and hope approach.
But this is not a time to be stupid. Definitely not the time, because the biggest bubble in the world, I believe, is about to bust. So after about 4 years of just pumping money into the system, it's running out of the system right now. It's called a 3 times crash. The first crash is going to be stocks and bonds, and that's the 401k and IRAs for many of the boomers. Number 2 is real estate. Home prices are dropping because interest rates are up. And number 3 is cash. When they print money, the value of cash goes down. And my concern is there might be a run on the banks. If people just want to get their cash out, or the banks may freeze your money. So these are very precarious times, and they're not normal, definitely not normal. But the other thing too is, as I said, the Fed, Bernanke, who got a Nobel Prize, you can imagine that, and those other characters just blew the whole economy the world economy into this bubble. When just not that long ago, people were screaming, bidding up real estate prices, then they raise interest rates and real estate prices are crashing. So if you're one of these persons caught upside down, you bought the house for, let's say, $1 million, but it's only worth $500,000 today, you have some personal problems right now. So Tom, give me an overview of what you think of the world economy today. Are we just going to keep, is real estate always the best investment?
Well, hard assets definitely are. Definitely, hard assets historically always have been the best investment. Real estate, precious metals, other hard assets. But
oil.
We're in such a time where people just don't know, right? The markets don't know what they want to do. People don't know what they want to do. People are spending still like there's no tomorrow, literally spending like there's no tomorrow, and they're running up credit card debts. And you just wonder, how long can this go on? They've had so much money given to them by the federal government, and now, that's starting to run out. So what happens when it completely runs out? It's really a tough time, I think.
Many individuals deposit their savings into mutual funds or 401k accounts without giving much thought to where their money is going or its long-term viability. However, hoping for positive returns without actively managing one's investments is not a prudent retirement strategy. Additionally, Kiyosaki warns against relying solely on paper assets such as stocks or bonds due to their vulnerability during market downturns. While stock losses may primarily impact individual companies or investors directly involved with them, real estate market crashes have far-reaching consequences that affect entire communities and industries. Why invest in hard assets?
I was at one of the high-end restaurants here in Scottsdale, and my neighbor, Scott Shermer, and I was sitting there looking at the prices, and he and I have lots of money, and we were in shock. We said, I thought about going to eat at McDonald's or something, price of a bottle of wine was now $200, one hors d'oeuvre plate was $60, and when the place was packed, and Scott and I are rich. I said, I wanted to run, but these guys are just partying away like there's no tomorrow. So that's on credit. I'm sure some of them are credit cards. Some people are very rich here, but I tell you, these are not ordinary times. You need help right now because, the stock market was blown into a bubble. This is a 3 times crash. Stocks and bonds, real estate, and then cash is going to go down because they keep printing more money. So the savers will be losers also. So right now is not a time to pretend you're Warren Buffett or something. Even Warren Buffett just sent out a warning, saying that the CEOs and CFOs are lying. You can't say much more than that. So these are not ordinary times. You think, I'm just going to buy the dip and the prices will keep going up. My concern is we might slide into a depression, and then you'll be upside down. So Tom, let's say I bought a house for $1 million, but now it's only worth $500,000. Is there anything they should be thinking about now before they exit stage right?
Well, first thing is, if your house is still high in value, you ought to be thinking about getting a line of credit on that house so that when it does drop, they still have that available to them, because that's the problem. When a lot of people, their primary wealth is tied up in their home, right. And if your wealth is tied up in that home and that home goes down in value, you can no longer say, well, I've got this extra bank here that I can go to. I can, I don't have this real estate I can refinance, I can pull money out of. And so really there are some things that they can do in preparation. From a tax standpoint, you know what, you don't get to deduct losses on a personal residence. So what you might want to be considering is, do you want to have rental properties where you get tax benefits instead of personal property where you don't?
Right, all those little finer details that the average person doesn't know, or our schools will definitely not teach. And like I said, these are not ordinary times. I have never seen, when real estate prices, just a year or so ago, they were bidding the prices up every day. And I said, this is not going to last, but that's when all the suckers jump in. And, and lately I've been talking to people about buying silver. Like one guy goes, oh, well, the premium's too high. I'm going, but the price is still low. I was buying silver at 50 an ounce, and today it's about $32, $33 a coin with premiums. And oh, no, I'm going to wait for it to go. I'm going to wait for my house to go up. I think one of the most silly things people were doing was that, the house would appreciate, which it wasn't really, because they're just pumping more money into the system. So they would go out on their credit cards, they pull out a home equity loan and pay off their credit card. I think those days are kind of over right now, right?
Well, I think so. I always have thought that the worst thing you can do is turn short-term debt into long-term debt. I think that's just turning a short-term problem into a long-term problem. So I've never thought that was a good idea. I do think having a line of credit is a good idea, but just have it there. Just have it available to you. I think whatever you can do to protect yourself it feels a little like, to me, I don't know about you, it feels a little like 2007. We're okay, it's coming down. When's it going to hit? And, all the prices are softening in the real estate market. People that are selling real estate still think, you know what, this is going to come back up, so I'm going to hold my price steady, and then there's no buyers. And that's what's going on, like even in multifamily, that's what's going on. So they're just having a tough time getting the price right between buyer and seller.
I think I'm trying to warn people, this could be the biggest crash in world history. Is that possible, Tom?
Oh, it's absolutely possible. Well, it's the biggest bubble in world history. Yeah. So if it's the biggest bubble, the question is how much can they keep pumping air? The bigger the bubble, the more air you have to pump in to keep it inflated, right? So I think that's the big challenge is you lose some of these tools, especially where the Fed has decided we're not going to pump up this bubble. Right now, we're going to deflate the bubble. And so when you have deflation going, and then if the economy then all of a sudden slows, then you're in big trouble because you can't adjust that fast.
Yeah, and also, when people getting unemployed and all this stuff, their tax base is dropping. So the government is going to lose their income, which pays for our debt, which is at all-time highs of, some people say it's about 32 trillion, but when you count unfunded off-balance sheet liabilities, it's like 250 trillion. And then, so if if the government, the Treasury doesn't start collecting, IRS doesn't start collecting more taxes, they can't pay the debt. And so that's why Biden, one of his first moves was to announce 87,000 new people working for the tax department in America. They're coming after you, George.
To higher yield investment options that were previously inaccessible due to regulatory limitations imposed by securities laws. Conclusion. The looming crash of 2023 presents a significant challenge for investors. As conventional investment strategies are proving increasingly vulnerable, diversifying one's portfolio with